Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going over M1 Finance earned dividends versus paid dividends. So, if you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week, so consider subscribing. If you are a recurring viewer and have not yet subscribed, hit it as well. If you have any comments, questions over personal finance, real estate, stock market, let me know in the comment section below. And of course, if this video does help you out or you do enjoy it, hit that thumbs up button below, and let's go ahead and get into it. So we're going to be covering earned dividends versus paid dividends within M1 Finance. So currently we have the Roth IRA pulled up right now, and we have the current earned dividend shown here at $188.84. Now, what earned dividends are inside M1 Finance, these are the dividends that you have earned while holding the security or the stock or ETF through the ex-dividend date. This is not the total amount that you've yet been paid, and in order to see how many dividends you've actually earned, you go ahead and just click on your portfolio here, make sure you're in this tab, then here underneath the gain, click on the arrow, and it will show you what your earned dividends are for your current period. If you want to look at it over the last month, you can see here that your earned dividends will show up quite, a little bit different here, showing up as $23.67. Now, if you're looking for your paid dividends, these show up a little bit different, and these are actually dividends you have been paid and have received in cash inside of your account while holding the dividend through the ex-dividend and haven't paid. So these are shown within your activity tab. So select your activity here, and currently I have no pending activity, but here towards the bottom you can see that we have dividend buy orders and sell orders. So all we have to do here is select it, and right here towards the bottom on the left hand side we can see dividends. So we select the dividends here, and it drops down and shows us, okay, we were paid $5.02 from Avery Dennison Corporation, $2.08, Stanley Black & Decker, $2.43, Kellogg's Company, we were paid 51 cents. So that's a total there of $5.02. So these are paid dividends. So now that we kind of got, what are earned dividends, what are paid dividends, I want to kind of do a combination of these in the video. So this video, I won't be actually doing the paid dividends, but we're going to try and do an experiment to show the earned dividends. So currently in my portfolio, I hold a number of stocks. Now, within these stocks, I currently have these sorted by which stocks are going ex-dividend in November. So, Stanley Black & Decker, Kimberly-Clark, Essex Property Trust, WP Carey, Cardinal Health, Digital Realty Trust, Altria Group, and Avery Dennison Corp. are going ex-dividend in December. So, I've already pulled them up here in the order that they went ex-dividend. So, ticker symbol AVY went ex-dividend on the 4th of December and is payable on the 19th. So here, if we look at our activity tab, this should have been something that we were paid. We saw that here, $2.08. So I kind of go back over here and I can see, okay, here, this one was supposed to pay me roughly $2.08 every quarter. Or yeah, so that's showing correct. So I was paid $2.08, and that's what I was expecting here. So this stock went ex-dividend and paid out. Kimberly-Clark here went ex-dividend on the 6th of December and is expected to pay out on the 3rd. Here on the first week of January, I should be paid out that dividend. Now, ticker symbol DLR, this is the Digital Realty Trust. This one went ex-dividend on the 13th of December. Its payout date is not for a while. It's not till the 15th of January. That would put it at what? DLR. Maybe I don't have that one in here. It should be either the second or third week within January there. And then we have Altria. So Altria is the one we're going to be doing and using in this experiment. So its ex-dividend date is on the 24th of December 2018, which is currently today. It's 12:46 in the morning right now. The markets have not yet opened, but today we're going to be capturing the ex-dividend. So currently, M1 Finance shows us as having right now, because the markets haven't opened up, we're showing $188.84. So when the markets open and M1 Finance recognizes that I have earned this dividend coming up, it should increase my earned dividends by, let's see, Altria here. It should be paying me out roughly $4.56. Now, I may have bought some additional shares sometime in December, but I don't believe I've been buying up any Altria right now in December. So I should be up $4.56 when this goes ex-dividend, and that will have qualified or classified as an earned dividend within M1 Finance. Now, I do have a few other stocks here that are still going ex-dividend. We have WP Carey, which is going ex-dividend on 28th. We have Cardinal Health, which is going ex-dividend on the 31st, and we have Essex Property Trust, which is also going ex-dividend on the 31st here. So we are going to be looking and using Altria here in our example. So when I come back and take a look at this here on Monday, we're going to take a look here, and this should have jumped as an earned dividend to roughly 190. So I'm going to go ahead and stop the video. Well, I'm going to pause it real quick, and then we're going to jump into the next day. Okay, and we're back. Now, we already discussed in the earlier video that we can see that these dividends here, these are considered paid dividends. Now, in our example, we wanted to use ticker symbol MO because this was going ex-dividend on the 24th, and it has clearly passed the 24th of December 2018. So our portfolio in the earlier video was earned dividends was $188.84. If we go here and take a look at our earned dividends now, we are sitting at let me go ahead and move this bar out of the way and open up my handy dandy calculator. We're now sitting at $193.40. That's how many dividends we have earned. We have not been paid out those earned dividends yet, well, a portion of them. So 193.40 subtract, and we're taking out what we were at just earlier in this video of $188.84, and that is a difference there of $4.56. Now, what happened here on Monday? We went ex-dividend on Altria. If we take a look at our spreadsheet here and take a look at Altria, for the shares that we earned, or that we owned, we should have been paid, or no, we should have earned $4.56 on the ex-dividend date of the 24th of December 2012. So M1 Finance, while holding ticker symbol MO, has earned me that additional $4.56, but it has not been paid. Here in my activity, I have not been paid any dividends. It will not be paid right now until the 10th of January 2019. That is when this cash will show up as an activity within my portfolio. Currently, I am not showing any sort of activity for Altria, but it is considered an earned dividend, showing as an increase there of $4.56, which we have predicted here using our spreadsheet. Now, Altria, on the 10th of January, this will appear here as cash of $4.56 that I'm able to reinvest partial shares here on M1 Finance. And my portfolio took a nice dip here, going down from a negative of 12.26% earlier in the video to now a negative of 17.4%. And my capital gains here, big whoop, were at negative $789.27 to now I am down $1,131.06. But I don't need this capital right now. I am investing for dividend income. Guess what happens here in 2019? So earlier when I started this portfolio with just $5,500, those $5,500 were making me $179.23. Now guess what? For this year in 2018, I have spread out $5,500 between January 2018 and December 2018. I'm about to finish up my last deposit. Now that'll officially be my $5,500 of contributions. But here we can see that this year in 2018 we were in negative a lot of the year. You know, our portfolio was in the negative. But if we took $179.23 and say that's what $5,500 bought us, $5,500 bought us $179 worth of workers. You know, for every couple $100 that we deposited, our portfolio was generated $179.23. But if we multiply this by 2, which would be the equivalent of putting another $5,500 to work for us, our total for $11,000 of capital working for us in the market would be $358.46 if I had just put in $11,000 at the very beginning of 2018. Instead, I spread out that additional $5,500 over a 12-month period, and now my annual income currently, as of 1 December 2018, was $368.46. So my dividends, my contributions in 2018, even though it was spread out week after week after week, I put in additional income, I actually came out with my annual income being higher now than if I had just deposited the full $11,000 in early January 2018. So now, starting in 2019, I'm going to be starting with an annual income for 2019 of roughly $370, $380. That's going to be buying me back more shares at a hugely discounted price. These dividends that are going to be paying out and being reinvested into my portfolio, they're going to be able to buy back at much higher yields. That's going to allow my workers to work even harder for me. So instead of earning $368 or multiplying this by, what was the initial port here? $179.03. Instead of that multiplying, 179.23, instead of multiplying this by 3. So by the end of 2019, my portfolio will be generating somewhere between, say, $550 to $600 plus more dollars of just straight dividends. So the way that this portfolio is designed, it doesn't matter what happens to the equity. Equity is one thing, but you can't live off your equity. If you're holding Amazon, Facebook, Tesla, you can't live off your equity unless you sell. But guess what? Every month, my portfolio generates roughly $20 of dividends, and that's going to continue to compound month after month after month as these dividends are buying back more shares at a discount, as these companies are continuing to raise their dividend as they have for the past several years. Here, Lowe's, ABM, AbbVie have grown and paid out and raised their dividend for years, years after year after year, continuously raising their dividend, continuing to pay out a dividend, and it's going to compound much faster here as I'm buying into 52-week lows, as I am buying into 52-week highs. So that is it for this video, guys. We have talked about earned dividends versus paid dividends. We've gone over paid dividends showing up in your activity and earned dividends showing up here underneath the gained. I do have a website here, a post that I've actually created going over the exact same things, earned dividends versus paid dividends. It will be in the description below and also in the comment section. If you guys want to just go ahead and take a look at that, give it a thumbs up. And of course, if you did like this video, hit that thumbs up button below. Subscribe to my channel if you have not yet subscribed. And of course, if you have any questions about this video, leave me a comment below, whether it's about this video, personal finance, real estate, stock market. Let me know in the comment section below. Are you worried about the stock market crash? I am not. My dividends are going to be buying back more shares at these discounted prices. I've already paid for these workers my dividends here that are buying me back and paying me out more dividends, but I'm getting a much better value on the stock market and on my stocks here that I'm purchasing back at these lows. So I'm all for it. The stock market does continue to go further. That just allows me to buy back more stock. That's going to continue to raise out their dividend and pay me more in the future. So thank you all for tuning in. I will see you next time. Have a great day. Bye.